All right, Ben, thank you for flying from all the way from Perth.
Yep. Here to see you, Thomas.
Yes, but you do look after the whole Australia anyway.
Yeah, we do.
Yeah,
Yes.
it's very hard to find a commercial buyer's agent who had valuation background, and you still hold a license nowadays.
Yes, so I'm currently still a commercial licensed property valuer,
Yeah.
and we use those expertise in the buyer's agency space in commercial and residential property as well.
Ben, please help me and our audience to understand, because one thing I struggle the most is to fight with some of the investors' overconfidence, and valuation is probably sounds like a dirty word, and both myself and commercial bankers, they scare about the result, and the commercial banker, they usually refer 3 valuation company and then get the clients to pick because they don't want to get a blame, and if the result doesn't match the contract price, or the risk is too high where the banks actually want to do extra amortization, which means it can lead it to negative cash flow for commercial property. So where do you see that coming, and how a good buyer's agent in commercial space can avoid that problem?
Well, using experience as a licensed valuer in that buyer's agency space, we do a lot of the due diligence up front to work out whether we're paying the right price for a property. A lot of people get into a contract, they take the advice of a sales agent. A sales agent doesn't represent the buyer. So a lot of times they might pay too much for the property, but with a buyer's agent with commercial valuation experience, we can use those expertise to do the due diligence, look at the sales evidence, and know that what we're paying for the property is going to get you through the whole valuation process, because the evidence that we're looking at is going to be the same as the commercial valuer.
Would you say that's like a guarantee, like things you selected for your clients can match the evaluation result?
In most cases, I don't think we've ever had one that we've purchased that hasn't met finance.
Yeah.
So we understand what the banks are looking for, but we also understand that paying the right price and looking at all the factors on that property is very, very important. So it never gets to that point where it's been knocked back from valuation.
A lot of investors in commercial, they're probably first time doing the commercial. They probably have a 3, 5, or even 10 plus residential properties. So they're also quite new in the valuation fees. Quite a few $1,000s fees they need to pay to the commercial valuer, but with residential is free. So can you give us a little bit information why is that in structure or price structure in this industry?
I think it's the experience that you're paying for. Commercial is a very, very different type of asset compared to residential. So commercial has a lot of different moving parts: leases, understanding the type of tenant, zoning, what the property can be used for, the structural integrity of the building. So understanding the cash flow, which is generally what a commercial property is, you're buying the cash flow. So you need to understand how that works. So it takes a higher level of expertise to understand the asset that you're purchasing.
Yeah, so it's different experience. Like residential, they can do desktop, they can do short form, come back, curbside, 2-3 days. Commercial come back 2, 3, 4, 5 weeks, or even longer.
Yeah, and unfortunately that's what happens because there's a lot more due diligence involved. Every commercial property is very different. Even if you're looking at industrial or even small shopping centres, for example, they all have different assets, facets attached to them, because they might all look the same, but the leases are different, the location's different, there's engineering aspects that are different, so all that has to be looked at. So it's important that you have someone acting on your behalf to look at all the information to know what you're getting into for that price.
What's the common pitfall for a first-time commercial investor? They want to get in commercial, they don't know what to look out for. What's the criteria will pick up a good asset?
So a lot of people make the mistake of believing the advertisement and trusting the real estate agent who's selling the property. Now, I'm not saying that all sales agents are unethical, but you have to ask the right questions. So a lot of people just look at the high-level income stream, but they need to understand what the net effective rent is of that property, because it's the net rental return that the commercial property delivers you is what makes that asset worthwhile. So understanding that is very important.
So we have to take away a lot of the other hidden costs or like calculate it well, for example.
Yes.
If you can give us some example about the common holding costs that the tenants pay or the landlord pay.
It depends if it's a retail or under the Retail Tenancies Act in Western Australia, they have gross leases as opposed to industrial and commercial property, which are net leases, where you need to understand that in commercial, and the benefit is that the tenant generally pays all the outgoings.
Even including land tax, council rate?
Land tax, council rates. So the rent that's getting paid, even repairs and maintenance, are paid by the tenant.
Mm-hmm.
But you need to make sure, and even management fee as well, that can be paid by the tenant as well, as long as it's in the lease.
Yeah.
So important, if you're looking at buying a property, that you get advice at least as a minimum on the commercial lease as well, because that lease is what works out what your net rent is. So understanding even items that are repairs to be done to the property are paid by the tenant, but if it's a capital replacement, that's paid by the landlord.
What about, well, with people buying multi-tenants properties like small shopping mall or an office or mixed use? On the advertisement, it looks like very good rent, but when we look at the breakdown,
Yeah.
there are some retail tenants the banks don't like.
Yeah.
There are some like half-year leases. So
Yeah.
how do we look in that?
So when you're looking at the tenancy schedule, there's a term called the WALE,
Mhm.
W-A-L-E, which is the weighted average lease expiry.
Yeah.
That's critical. So when you're looking at that, you're analysing the tenancy schedule, you need to work out which ones are expiring, how long the leases are. So when you look at the quality of that asset, the weighted average lease expiry is the important factor. So you need to be looking at all the leases and understanding which ones have expiries, which ones are close to default, the quality of the business. So they're important factors to look at.
So Ben, speaking about rental yield, is there an indication range for each different type of asset class they're investing or like location?
Well, we always try and go for an asset that is a good quality asset that has the potential to get a good rental return, a solid rental return with minimal vacancy. So generally yields for commercial properties, for example in Western Australia, a good commercial property could be anywhere between 5.5% and 6.5% as a net yield. That's a net return. Other ones could be as high as 7%. But with that 7% may carry a slightly higher risk, therefore that yield is slightly higher. So that represents the risk of that property.
Mm-hmm.
There are assets in mining towns that can be as high as 10-12%. However, we don't recommend those type of assets because of the risk associated with it.
Yeah.
If a mining company leaves, the asset collapses.
What about capital growth? Is that a trade-off? Is that a saying that if you have higher rental yield, you have lower capital growth, and how do you balance that?
I understand the question that you're asking because there's high and there's yields which are very low in residential, but you get high capital growth. If you buy correctly in commercial, you can still get a benefit of a good, solid capital growth on an asset and still get the rental return as well. But the secret is buying in good areas, industrial areas where the economy is not changing.
Mm-hmm. Speaking about industrial area, people chasing warehousing past few years. Do you think there's a bubble already, or do you think it's still a good time to buy warehouse?
It's segmented because, as I was explaining previously to another client of mine, that industrial assets, for example, warehousing, if the truss height is low, then trucks can't get in. So when it's coming to things like logistics and with the expansion of the internet and buying online, transportation has become a key factor in industrial property. So if you have a more modern premises with a higher truss, that becomes more valuable. If you have an asset that is a low truss and a bit older, then it's not as valuable. So you have to understand what the market is after. So there's still good prospects and demand in that industrial space.
So Ben, what makes you choose the career in commercial valuation, and then later on changed to career as a buyer's advocate?
Being a licensed valuer is hard work. You're sitting in the dark writing a long report for a banker. That's not a lot of fun.
Yeah.
The numbers are interesting, but for me, I like the interaction and I like the cut and thrust of a deal.
Are they high paying? Are they high paid job? They're charging the client so much?
We think that our service as a commercial buyers agency is very competitive. We can save our client a lot of money and save them a lot of risk. That's what we're here for. That's what you pay for the advice. It's good sound knowledge that gives you a good asset that's going to grow.
Yeah.
Minimising risk is what you pay for.
So what do you enjoy every day as a buyer's advocacy or buyer's agent in commercial space?
The negotiation. I love the negotiation. I love to try and tear down that real estate agent.
Yeah. But wouldn't the real estate agents like this, like if you don't pay this price, I'll give it to someone else?
That's okay.
Yeah.
We move on. It's unemotional.
Mm-hmm.
We don't get emotional. It's about the numbers, getting the numbers right and getting the right asset for our client.
So Ben, it seems there are more and more buyer's agents in the market, and even some of them don't even have a real estate background, and social media, some people are very good at make it very strong. So how can the investor differentiate a good and bad buyer's agent?
So we're, as Acumentus buyers agents, we're part of the Alba Group, which is Australia's leading buyers agency. It's a group that puts clients in contact with the best possible buyers agents around the country. So we're part of that. So what that delivers is good experience and trusted people working on your behalf. That's what you get. With other buyers agents, there's a lot of buyers agency is an unregulated industry. There's a lot of people in there giving advice, but they don't have the understanding or the technical skills to give the right advice.
They're just probably very good at selling the urgency.
Yeah, they rely on either their personality or their good marketing skills. But you have to understand property, and that's what Alba delivers.
And it's backed up by a very, very big publicly listed valuation company.
Yeah, so Acumentus is Australia-wide. It's listed on the Australian Stock Exchange. We have offices in every capital city in Western Australia. So if you need that commercial advice, we can certainly provide it in your city.
And why the fees? The fee is not cheap to engage with any buyer's agent, and especially the experienced one. So the investor will do the numbers. Oh, should I save that 1 or 2%? Can someone really save me the mistake and risk?
Well, buying a commercial property or any type of asset, is very expensive, and you don't want to make a mistake. I'm not saying that everyone is not capable, but if you need advice, you should be paying for the right advice, and that advice will help you not make a mistake. That's the important part.
And Ben, who's your common client? Are they like multi-billionaire, multi-millionaire, or like business owners, or normal mom and dads?
No, look, I'll do deals at $500,000, and I've done deals at 35 million. It doesn't really matter, and it doesn't matter what asset class either. But generally speaking, most of my clients sit between the $1.5 million to $3 million price range, where you can get good quality assets that generate a good income stream for the client. So that's the majority of our client base.
So Ben, last question is, if you have the knowledge and the experience you had today, roll back to day one of your career, just after uni, how would you plan it differently?
I would have bought more real estate.
Yeah, but how can a graduate student, do that? It's almost impossible.
Well, first thing you do is get a good broker who can help you in the journey. Getting help and being part of a group to buy a property is important to get onto the property market ladder as early as possible.
But do you have good mentors along the way, and how did you find good mentors?
I guess working in a big company like ourselves, we have a lot of people who have been in the industry for a long time, and we bounce ideas off each other and we learn from their experience. So it's important to find someone who you can trust in the industry and learn from them.
Sorry, I still have more questions I want to ask now. Would you mind share with us some case study, the worst case and best case, where the clients feel regret that they didn't engage with you, and then they come to you, they had a bad experience before, or some case you did see in the market? and good case study that you're allowed to share?
Well, a commercial one I just bought recently in Kewdale, which is a premium commercial and industrial estate southeast of Perth, which is about 15 kilometres from Perth. Had a client who's looking to buy a commercial property in their self-managed super fund. So we purchased the property. At the time it was vacant, and she was very nervous about buying a commercial property without a tenant, because obviously you need a tenant in the property.
Yeah.
We were confident by doing the analysis that we could get a tenant quickly for her. So we purchased the property at 1.35 million. We put a tenant in there at $98,000 a year.
Before settlement?
At settlement.
At settlement, wow. Yeah.
So we had advertised it previously, so it hadn't settled yet. Got the tenant in, so from day one she had income, 5-year lease. That rental return was 7.5%.
Yeah.
But we were carrying the risk.
Yeah.
Because it was vacant. But we were confident, we knew the market, that we could get a tenant.
Yeah.
Bought the property, got the tenant in, and she has a very, very, very good asset now.
Yeah.
Going back to valuation, that's probably worth 1.5 now, so we've added value straight away.
Instant equity, 150k.
That's right.
Yeah.
Yeah, straight up. So that's a very good example of one that.
And very affordable, 1.5.
That's
or
right.
1.35.
Yeah, in a good premium location, close to the airport, on the highway as well. In terms of, look, we've had clients too that, you know, we've been trying to engage with to try and buy property. They've sat back and we've given advice, look, you really need to invest now. I don't want to sound pushy, but the market's moving along and they're humming and hawing, they're not sure, they're uncertain. They've waited a year and they've lost 20%.
Yeah.
Just by not taking the advice. They think that we're trying to push them into spending money, but the advice we're giving to them is that the market's buoyant, get in now, and you can capitalise on that 20% growth.
So it's either not taking action or not taking advice.
Procrastination is your worst enemy.
Mm-hmm.
You need to act, but if you act, get the right advice.